Hey everybody, my name is Derek, and in this video I want to go over 3 different investing locks that I have been fortunate enough to have come across within my lifetime. The first 2 investment locks, you would need a DeLorean and have access to a guy named Doc, who's a scientist, meaning you have to go back in time. The plays are already done. A lock is an investment. When you make it, you plan on being a winner. At least you have a 98-99% chance of being a winner. It all started in the year 2000, about a decade ago. It was the summer, and I knew the right person at the time, who was giving me information about a Canadian Football League game that was going to have the Toronto Argonauts kneel down, just give up, get their butts destroyed against the BC Lions for the reasons of having their coach fired and bringing in Pinball Clemens. When I first heard my friend talking about this, he talked about the sources that he got it from. It seemed as if he was onto something about this particular play. I already liked the play on BC just by the math aspect of the technical analysis of picking winners, but I would like it more if this information was correct. I did further research within the matter, and then I realized an hour and a half before kickoff that this bet was guaranteed. I didn't have much of a balance at the time. I bet about $30-40 on the game, which wasn't much, but the final score was the BC Lions 51, the Toronto Argos 4. Easy win. It wasn't even close. And the coach got fired. Mike Pinball Clemens comes into play. I was able to get outstanding inside information before the game had even started. I have yet to have gotten a game that has had better than 94-95% success rate since then. But the next play I had with a 98-99% success rate was in the stock market. That was in the year 2008. And within this time frame of the spring and summer, I was noticing what was going on with the economic situation, how we are facing that economic destruction. The fundamentals were showing that the stock markets had to go down significantly lower, as were the technicals. The head and shoulders pattern that formed on the Dow had a neckline of 11,000 and a top of 14,000, which indicated to me that we should go to about the 8,000 level. I was able to come up with the October time frame in advance because, well, I had a big spiritual energy coming to me that was giving me that time frame. Now that didn't mean that much at the time frame, but it was something to be aware of. And about 3 or 4 days later after this, Webbot came on and stated that they had some linguistics in their language stating an October 2008 stock market crash. So now I felt extremely sure that it was going to happen, and of course the markets did felt pretty big during that time frame. Now the third investment has not been completed yet, and the investment is still available. And I'm sure you've seen this picture for $1,000 an ounce. Now I'm not saying that it's going to go exceptionally high or that will be its value, but the lock is that it's an investment that's going to pay out with a 98-99% plus success rate, making it that of a lock play. Now whether we go to 1,000 an ounce, 160 an ounce, or even $2 an ounce, the bottom line is silver becomes an amazing play. Now $2 an ounce, of course, sounds ludicrous, but if silver was $2 an ounce, that means gold would be like $80 an ounce. That means minimum wage would be like $1 an hour. That means your house would be like $30,000. Deflation would be the reason. But basically, you know what you're getting when you get silver. You are getting a real asset, real physical asset. I'm not talking about the COMEX or the SLV paper currency. If you choose to play that, then the risks are definitely going to be there on a longer term time frame. But I look at this during, say, an economic downturn, which seems pretty inevitable to happen, a global dollar collapse, which seems as if that's going to be a lock. Where's silver going to lie? Well, maybe as markets fall, silver may fall also, which would thus bring buying opportunities in play, but for only so long we're going to have buying opportunities as the prices go lower. But the way I see it is, if today I could take this bullion coin and get $20, which is pretty easy to do, then maybe I could buy 8 sandwiches at $2.50 a piece. Maybe in a year and a half I might only get 6 or 7 sandwiches with this. And I'm stating that because don't be surprised if on the next short-term time frame, next year or two, food outperforms silver. But this $20 that would buy 8 sandwiches today may buy you 1 sandwich when I'm getting 6 for the coin. After all, I think a move towards a barter system within the next couple years is a 5-star play, meaning a 90-95% occasion. And within the dollar devaluation and the dollar dying, we could easily have new forms of currency, new form of trade. It doesn't matter what that currency is going to be. It doesn't matter what that trade is going to be. Whatever it happens to be, you will be able to get your good share of whatever it is with this silver. Now, I like it not only for the economic downturn, but for the real economic recovery. Whether the recovery happens in 3 years or 10 years, it does seem as if we are moving towards a world with cleaner energies. And I talked a lot about solar panels. And when I made the bet on the BC Lions to take out the Argos, I was stating myself then that it was a bonus that if the information I had received on the inside job game to be true, then it would be a bonus. And now I'm saying the same thing here. It's a bonus if these solar panels take off on a major explosion. They start manufacturing them at massive levels, and the silver is going to be needed. We know the uses of them on the industrial levels are extremely high. The information that's been given to us is the amount that we have as far as supply is low. And if that's the case and we need more silver, the value for this will just massively increase. So this is my third lock. Whether the surplus of gains is a year from now, 10 years, 20 years, I think it's a combination of everything. We have seen the price have some volatile movements. Therefore, there is still time to be able to get this metal at these outstandingly low prices. I originally thought in 2008 that this would not be the case for this particular time frame. And I don't know how long we have of being able to get this metal for not only $20 an ounce, but even under $50 an ounce. I'm surprised we still can get it for under 16, although it's now trading at over 16 today. Nonetheless, I look at the information that I know about silver. I look at the information that I know about our fiat currency. And it seems as if that worst case scenario, you at least hedge against inflation. Everything after that becomes bonus. Take care, everybody, and have yourself a magnificent day.